All right, welcome to Talk Tickers. Today we are diving into Zumiez. They just reported their second quarter earnings, and the market? Well, the market loved it. So, what's behind all this excitement? Let's break it down.
Yeah, I'm not kidding. Right after the bell, the stock just soared, climbing almost 12% in after-hours trading. And what was the fuel for that rocket? Well, it was this right here, a really solid beat on the bottom line. They came in 5 cents ahead of what Wall Street was expecting.
All right, so let's get into the details. What did the headline numbers for Q2 actually look like? So you can see here, it was a beat pretty much everywhere you look. Revenue, beat. Earnings per share, beat. But, the real story for me is that comp sales number. This is their fifth straight quarter of positive growth. That tells you this isn't just some lucky break. This is a real trend taking shape. Okay, so how did they pull this off? What was the engine behind this outperformance? It really boils down to two main things: incredible strength right here at home and a super smart strategy with their own in-house brands. I mean, just look at this chart. This split tells you the whole story, right? North America is just an absolute powerhouse for them. We're talking the sixth consecutive quarter of growth. It's completely firing on all cylinders. And frankly, it's doing all the heavy lifting, carrying the weight while their international business, especially in Europe, continues to struggle. And this is their secret weapon for profitability. Their own private label brands just hit a record, making up 30% of all sales. Now, why is that such a big deal? Simple. When you own the brand, you own the margins. It gives them so much more control over pricing and, lets them dictate the trends instead of just following them. And this quote from the CEO, Rick Brooks, just nails it. He was super clear on the earnings call. He said, "Look, we're not using our private label to be a discount player. No way. They're using it to be a premium player, to lead on fashion and to command higher prices." And that premium strategy flows directly into something called average unit retail, or AUR. Basically, that's the average price of every single item they sell. And this quarter, that was the main reason their sales grew. It's all thanks to those price increases, selling more of the expensive stuff like apparel, and not having to run as many sales. So if we peek inside the store, it's kind of like a tale of two cities. You had some clear winners. Women's apparel, accessories, and skate-hard goods did really well. But on the flip side, men's apparel and especially footwear are still a drag on the business. Management even called the footwear market very challenging right now, so that's definitely a sore spot. Okay, so that's what happened in Q2. But what about what's coming next? Let's talk about their guidance for the all-important third quarter. And get this. If you thought Q2 was good, the start to Q3 has been absolutely explosive. The back-to-school season was a huge hit, and for the first month of the quarter, comp sales were up over 11%. I mean, wow, that is some serious acceleration. So that incredible start is what's backing up their really strong guidance for Q3. They're guiding for earnings per share between 19 and 29 cents, which, and this is the key part, signals a big, welcome return to making money. But here's where it gets interesting. Even with that explosive start, management is kind of tapping the brakes on everyone's excitement. They're being cautious, pointing to things like potential tariffs, that slow European market, and they're basically guiding for sales growth to cool down for the rest of the quarter. It's this classic tension, right? You've got this incredible momentum, but management is injecting a heavy dose of caution. So that brings us to the big question. How do we think about all this? What's the play heading into the next earnings call? Well, here's our take. The way the stock jumped tells you a lot. It suggests that investors heard the cautious talk from management and basically said, "We don't care." They seem to be looking right past it and focusing on the pure momentum and the fact that the company is profitable again. So how could you trade this? Well, one idea we're calling the momentum igniter. The whole thesis here is that the market still hasn't woken up to just how much money Zumiez can make now that its core North American business is so healthy. A strategy to consider might be something like a bull call spread. Now, without getting too in the weeds, it's just a defined risk options trade. You're basically making a bet that the stock will keep rising and that when the Q3 numbers come out, the market will be forced to reevaluate the company and push the stock even higher. So, wrapping it all up, when you look at their strong execution, that solid guidance, and the undeniable momentum in their most important market, North America, we're giving this an outperform rating. The big question really is, can the strength they have at home keep overpowering the struggles they're having overseas? We'll have to wait and see. And remember, this is not financial advice.